Hello, everybody, and welcome to another episode of the Plus3 Futures and Commodities show. My name is Ben Maldonado, and I'm here as always with Barrie Hederachi. Hey, Barrie, how are you?
Doing pretty well.
Are you getting some rest this weekend? We did have a busy week last week, as we expected.
Busy week, and then kind of recovering with my sea legs, going back and forth and all over the place. But it was a good ride.
Yeah, it was a nice week, profitable week.
Can't say we didn't call it, right?
No, you cannot say that. And the poster child for risk, here's Bitcoin.
Can't say we didn't call that either.
Agreed. The interesting thing was everybody was exhausted from a week of high volatility, big ups and downs, and they smashed this thing 20% on Friday night.
Yeah.
That is a piece of work, man. Yeah. Like I say on Twitter, hat tip to the boys who control that market, because that's something else. So
and let's take a look. Blame it on the Asians.
Right. They low liquidity. It wasn't done on purpose. Come on. It just happened to be the time.
Yeah.
So last week we were talking about how being stuck under this, this full square, it's a precarious position because you're vulnerable to a sharp decline or a move lower. And Friday night, as we said, they got it in spades. We almost did a coast to coast. We were at the full square early in the week, and we just were short of the bottom of the square last night on the plunge lows. Mm-hmm. We've worked our way back up. The next test and the most important spot right now on the chart is this half square at 50,600 area. If we get stuck below there, again, we're going to be in the same position. We're going to be vulnerable to, another bear raid, another move lower, and maybe testing this full square. If we can get above it and sit on it, maybe it was just a screw job on a Friday night with low liquidity. But until we test that and see how it goes, it's right now being under that half square, it's bearish. Anything to add on Bitcoin?
Well, I mean, it was bearish from the time we took out that first square, right?
That's right.
It was bearish after we called out that false break at the high at the half square. And now it's, full scale, right? Looks like we did an ABCD, so down. So it's probably some kind of a stall here. Yeah, from there.
Let's see what it looks like. Yeah, that's it.
Pretty close. And well, long as we're below the half square, it's still weak. It might consolidate, and God forbid if we take out that lower square, then all bets are off.
Yeah, and then it opens up down into the 20,000 area, which
at least that middle square, the next half square, right? The center of that expanding triangle, sort of formation right there. Yeah, where is that?
That's around 32.8, so around 33,000 in that area. This, when we were talking, we were saying, it wouldn't be surprised if we went into some sort of chop in here under that half square in some sort of fourth wave move.
Right.
But we'll see. The key thing is that these squares that we use and we talk about all the time, they give you a good reference point where you can say, hey, if I short against this, I've got very little risk because I know I'm wrong if we get back above this square, and sit on top of the full square. And the reward is a minimum of a half square.
Right.
So, and in this case,
not that we're giving advice, but that's the proper way to do it with any kind of a line, right? If you have any kind of an edge, a line that would give you an edge.
Exactly. And one of the things, we talk about, let's talk about what we're going to do today. We're going to tape this show, which is the regular weekly show. And then we're going to do a separate recording dedicated to the monthly. So we don't have too long of a show, now neither one will be that long, but they'll both be informative so you can listen to them. And please make sure if you like the content that you do ring the bell, give us the likes, subscribe, comment, do all the things that YouTube wants you to do so that we can get those notifications. We'd appreciate that. So Bitcoin, again, the squares gave us what we call an edge, where And an edge we define as the probability of one thing happening over another. When you're stuck under that square, the probabilities are you're going to go lower, that there are higher probability that you're going lower rather than going higher. And that played out in spades in Bitcoin. There's the E-mini. Boy, that was quite a ride this past week. And man, that 44.90 level was good.
44.90 held pretty well. Yes.
Yep. Caught the low.
And that 46.93 helped us, figure out the direction early on.
Absolutely. And also, look, you got a low came in right on your timing, right on your half square timing.
Yes, that would be 45 low to low, right? Mm-hmm. And that reminds me, that's a good starting point, actually, because I wanted to look at this. This is the calendar day chart, and this is the using a square of 90. And we talked about this last week and last couple of weeks since this timing cycle came in. And that being, we made a 45-day run, and that usually ends some of these long-term cycles. And after that, what happened was, we sort of screwed around for a couple of days, got the false break, and then we started to get weaker and weaker. So now we're at a 1/3 in time. We're 60 days. Mm-hmm. And we're 30 degrees up, so 60 by 30. And looks like it's playing in the thirds because you can see the false break high was also on a 60.
Yeah.
From there, we came down. So next week is going to be really interesting because look at that. We had 3 days of testing the same lows, right? Right in there. And that's 1/3 of that square. Now, if we can hold it here and recover the 50% of the square, which is around 46.20, then we might be back.
Bulls are back in business.
Bulls are back in business in some form.
Yeah, we were talking during the week. If we lose that 4,500, man, it's going to be a quick trip to 4,400.
That's right. And here's another reason to why that level is important, and that's the looking at this square 72 from all the way from last year's lows. Mm-hmm. This is 288 degrees up, and look at that. That's exactly where we came back to sit, right? Mm-hmm. Now you can pull this, we can pull this off with lows coming in here. That's very firm. We're on firm ground. That's a normal pullback, and we can be on to the races again. Now, if we lose that, it's going to be critical at this point, right? At any time during the week. So that low, it's that 44.90 that we talked about earlier, this is no joke, right? It's derived from a couple of important levels. So we really kind of have to hold that. And also this channel line that I had put in, it's been there for a couple of weeks. It's a normal channel. I didn't do the trend line, but you see how it came right to the channel also. So, this is a pretty good point. We have that 30 by 60 on the calendar chart. We have the 45 to 45 low to low cycle coming in here. So 44.90 looks like it could be a decent support, at least for a bounce to go up and test the halfway, which is around 46.20. Mm-hmm. Now 46.20 is going to be the next key level to really take out. We can take out 45.60. That could be initial kind of an okay. But really, we have to take out the 50% to really be back in business. So 45.60 and then 46.20 would be the two key levels to watch. And looks like we're on pretty good support. I showed you guys a couple of different charts. And let's take a look at the weekly also.
Barry, that is beautiful analysis. And you and I always talk about it. You got to think like a criminal, man. That looks too easy, doesn't it? like the Monday they're going to come. I just have this feeling Monday they're going to come and clean those lows out and then reverse hard, something to that effect.
That could be, but that's a general area, right? So if you look at the weekly chart, look at this, square 52, the quarter line is right there, and that's around 44.80. So 44.70 to 44.80 is another area that we have to watch just because of that. Right, we have some support there. Like I said, it's not about the support really this week. the point is, what happens if we take the support out?
Yeah.
And so it's a key thing to understand, right? If we take this out, can't really recover that level, outside of a false break, then I think we have a long way to go. We might even go back and test these old lows. So, so we got to watch that. And the only level I would add here would be that 40, around 44.70. Let's use that. And if we get down there and reverse, okay, fine, we're still within the boundaries, right? It's not a big failure. But if we take that out, 44.5 is the next, and then after that, it could really get out of hand. We're not. So this level is pretty much the same level, same importance as we were when we talked about 46.93 up here. You see how it messed it out a little bit, but it really couldn't recover that, right? It was always weak on the weak side of it. So I would say it's the same thing with 44.90. It's just as important. You want to make sure that it can hold on the strong side of it, firmer side of it, which is the upside. If we slip below this, I think 44.70, might be fair to just go down there and flush it out, like you said. Well, these are the couple of numbers to watch below 44.90. On above, 45.60, recovering 45.60 is a good start, and then 44.20.
Yeah, I've got some in my work. I did some flush targets where like 44.54 down to 43.82 in that range. So
okay.
Let's see.
Yep. So that's enough for the S&P. On bonds, well, we've been talking about this 160, 161, this the blue line we have here to be support, and you can see we touched it before taking off, right there. We came back to it and we started pulling higher, and now we're back in the fray. The same, all that business from in the summer. So 164.26, 165 looks like fair game. And that's the next target we have. And it really needs to take it out to go higher. But you know what? I have targets coming in at about 170. So it's, we could just shoot up there. We have to talk about that, right? Possibility.
And that would be consistent with, flight to safety and risk off. So maybe for that to happen, we have to lose that, 44.90 area and plunge a little more.
That could be, yeah. But anyway, this would be a long-term sort of a level to watch. But for next week, 164.26 area, 165 is the target. But this thing is really broken out. We got through the half square right there. That's the dashed line, 162. So everything's working well mechanically. It looks good, looks strong. Anything you want to add there?
Not just that bonds look good right now.
Yep. And so we covered the support and resistance on that. Let's take a look at the weekly charts. So, last week we talked about the 158.28 basis, the weekly being a key support, which we tapped the week before. And we remember breaking this, we had that little bit of a break, then we pulled back, right? Now here comes the second break. So we have that break and good follow through, looks strong. And a lot of upside up until about 170. And that's a quarter square on the square of 90 here. And also we have a big ABC target that gets up into 170, 171.
Yeah.
And that looks good. I mean,
my weekly shows that's a good area for targets too.
Yeah,
around
that would be a good trade. So we're going to watch. That could be a nice long side trade to keep an eye on, among other things. And let's take a look at crude. What to say, right? I mean, we called out the high, false break, not the false break, but the pullback and straight down. And I think last week we talked about, hey, if we lose these levels up here, it's probably going to end up testing the old lows back from August, and here we are. And I think I popped in 169. 169 would be the key level to watch next week to see if we can recover that. If we can recover it, there's some hope. And if we can't recover that, I think there's probably a little bit more downside. Maybe down to, 61 is fair game right here, or 57. So 61 is really the key, because that would give us a false break.
Yeah, 61 is important on a monthly basis. We got to hold
also,
that area.
Right. So it's possible we get a little bit of a false break here, and then that being the end. And we have this blue box here. That was that support area that we drew in, I don't know, a while back. So there's a lot going on here, and we'll wait to see what happens. Moving on to, that was
the weekly.
Yep. Going back to the weekly. Well, last week we talked about these support area here. Remember we drew this box out? Well, there it is. We're right in there. So we're in, no question about it. There's some support at this level. But weekly being the weekly, we broke 2 trend lines, right? So it's possible we go down and test the square 52, which is around 58, 59 would be that area. And if 61 goes, we're definitely going to test this. We're going to go down to 57 at least. So that's what's set up here. So 61 is key level to watch, see if we can hold that.
Absolutely critical right now.
So here's the 61. If we get down there, we have to hold it. And for the bull side, we really need to recover 69 and hold above that. Covered bonds, we are missing.
How about the dollar or gold? Yeah, gold.
Yeah. Take a look at this. All right, there's the gold chart.
Hanging on to that channel barely, but hanging on.
Man, he's hanging on, and our it's a little bit of a battle zone going on in there. But hey, the numbers we called out are fairly good here. 1765 we've been talking about as support, and we hit that Thursday, got a little bounce off of that. We are at the bottom of the channel here. Again, it's funny how everything's hitting critical levels this week. Critical meaning, if it holds, fine. If it goes, we have a lot more to go, right? So I think the same thing for gold. 160, the 1765 has to hold. It's good support. And if the shorter time frames start showing up on the long side, they're probably worthwhile playing. Long as 1765 is holding, upside target being 1832. And probably the half square is the next in line, around 1855, 54, 1854, let's call it. And that's where we were consolidating right before we dropped, right? And, which was exactly 180 days, 180 trading days from the March low. So that's
good timing.
Yeah, it's good timing. Everything's lined up, and the pullback to the quarter square is bullish. I mean, it could have gone below, it didn't. Everything kind of held together. It's tight. So watch 1765 and see how gold behaves. Looking at the weekly gold. Well, this has been a good story, right? We've been watching this for a while. We had the breakout. We were looking for some resistance up here, and that's exactly where we got it. Came back into the fold. And I think weekly basis, we were looking at 1767 here on the side, being a key level to hold also. And looks like it did. So looks bullish overall. We're making higher lows,
Yep.
but we are back in the compression zone. We shouldn't lose the fact that how long this has been compressing now on a weekly basis. So
The move's going to be huge out of this trial.
yeah, something's got to give, right? I mean, this can't just go on. So yeah, we can go a little bit longer, but it's starting to get antsy. You can tell.
Absolutely.
So watch the lows now for now next week, because those are important. If we hold them, then the upside is open. If we take them out, then the downside is open. They're really interesting levels for both sides, because if that goes, we could easily go back and test these lows. So, and that's quite a ways for gold to go.
Agreed.
Let's take a look at dollar. Well, what can we say? We've been bullish and still bullish.
Mm-hmm.
And, this 95 level is the level we've been talking about. It was a target from the early days, and now it's turned support. It's also the half square. So I think, yeah, we could consolidate a little bit because we do have a little bit of overhead up here. And as long as we're holding above 95, I think we're in pretty good shape.
Where would your opinion on the dollar turn? Like what would we have to see for you to say, okay, the run's over?
I think 95. I think taking out 95 would be a good one.
Mm-hmm.
Yeah, this is the key level here. Even then, I mean, look how far we are from the trend line, right? It would really have to take this out, and that would be, yeah, I would think for now, for next week anyway, 95 is the key. It might change, the point of where it would flip would turn if we go higher. But for now, I think 95 is a fair level to watch, because it gives enough leeway, enough breathing room for the market and still stay with the trend. Well, now talking about
Decision point.
trying to answer your question. So here's a 45-day run in the dollar, right? So, and I think we dropped this in last week, and we hit the upside of that, and the high was also 60 degrees up. That's 2/3 of the square,
Mm-hmm.
and a 45-day run up. So hey, listen, it's possible that we pause here for a bit. No question about that. And the 95 would be the key area to watch. If we pause above that, that's fine. It's still bullish. But somehow we get under that, then it's a whole nother deal.
Yeah, the reason I was asking is, as you were looking at the gold chart, I was noticing that, in my scans, the precious metals, both gold and silver, look like they are poised to start making a run higher. And if the dollar turns down, that could be a tailwind for them for sure.
Well, it did square it out on the weekly basis, right? And as you can see, once a weekly turns, it can take several weeks for the whole, it's like
turning a battleship, right?
Yeah, it's like turning a battleship. So it takes a while, a couple of 2-3 weeks, maybe up to 5-6 weeks. So we'll have to see. So far, it's okay. If we lose 95 in a hurry, I think then clearly dollar has a sort of a medium-term high in place.
Mm-hmm.
Otherwise, it's in good place. We have a very strong trend line here. It's holding well above that. So I think it's safe for now.
Yep. Bears watching.
Yeah. Well, yeah, the run is kind of over now. We're kind of consolidating after that square came in, right? So let's see how that goes. Looking at the euro like we always do. Last week, we talked about how, we had some support here, and we talked about the quarter line, the square up here to be the resistance. And you can see how, price shot up there last week, and that quarter line just held like a rock and sold off. So it's basically doing what the dollar did in reverse. Again, looks like it's trapped between these two levels, and the levels being 120 and 138. So that's those two levels to watch. And that's all I got for today. We have the monthly coming up, so let's wrap this up And you have a little bit to cover, right? Covering
Yeah, I
corn
have
and a
about
few other things.
four different markets to cover. Yeah, 4 or 5.
Great, great. And guys, if you guys like the show, you guys like what we're doing, please remember to hit the likes and leave a comment, and maybe hit the bell to get the alerts when we upload other things. And we're probably going to start doing more videos in the future. So, alerts are a good way to keep up with those. Let me send this back to you then, Ben. Well, there it is. We've been talking about how heavy it looked at the top, and here we are.
I just love how these squares work. You see, the first time we challenged, got rejected, but then the second time it went up, and you say, okay, we're off to the races. This was when a couple of weeks ago we had the discussion about, everything looks great, but when you dig down below the surface, it's a few stocks holding up this indice.
Right.
And we pulled back, and 4 days we tested that line.
Yep.
4 days, and then it finally gives out.
Mm-hmm. Looks a little bit like a Bitcoin chart.
It sure does, doesn't it?
Mm-hmm.
Very similar sort of false break, getting stuck under, and then giving it up. So the key levels for this week, which, by the way, all these levels are on our spreadsheet. We have a Google Doc spreadsheet that every week we update it, and I'll put out the link to it when I put the link to the video. So if you need to see what levels, or you want to see where the levels are, just check out the spreadsheet and you'll see. And there's some comments in there as well. Interestingly, I was looking at the Bitcoin comment I made. I date it so you can see when the date was. On November 13th, I said, Bitcoin must hold the lower level or risk of a big move lower. Well, that sure came to pass. And that was that we had to hold that square level that it couldn't hold. So anyway, as Barrie said, this looks a lot like the Bitcoin chart. We broke an uptrend line here. We closed below the half square. So this 15,800 area is really important. If we continue to be stuck under there, the probabilities favor we're going to come down and test this trend line and hit this full square, which is around 15,200. So it's in a weak position now. We're watching it. The interesting thing is we closed right on the highs that we made in August and September. Just enough to have you doubt which way it's going to go. So let's see what price tells us Sunday night and Monday. We know the levels to watch and the levels that are important to give us a clue as to which way it's going to go. Real quick, here's the ES daily. It also shows.
Hey, you have support also.
Yep. It also shows that that we're sitting, just above support here. It's 4480, which is very similar to your number there. If we lose this support, that's why I was saying the lower targets, we could whoosh pretty easily down here to 43, 4400. Maybe we don't go all the way down because of all the support that Barrie showed. Maybe we come down to the 8th square, which would be, 4434. Or if it really pushes it, maybe we get the quarter square, which is around 4400. So we're watching. Sunday night's going to be very important. Monday, obviously, very important to see what they're going to do with this support that's here at this 4480 level. Are we going to test it? Are we going to breach it? What are they going to do? We shall see. One of the markets that Barrie covered that I wanted to also cover, because it looks like we're curling up and can make a decent run higher, is the 30-year Treasury. The thing I've been looking at is we were stuck in sort of this half square range for almost the entire month of November. With the full square being here and the half square here, we were sort of bouncing between these levels. Well, Friday we decisively broke through. So any pullback we want to see, do we stay on top of this 63.16 level? If we can stay on top of that level, odds increase that we're going to go up and we're going to test this half square at 67. That's the next decision point. on this grid. If we pull back and cannot stay on top of that, it'll be a failure. It'll look like a false break, and we could have a fast move to the downside. So we have a very good marker and a very good reference point to use to gauge, whether this market is going to kick it into high gear and run higher, or if this is just a false break and we're going to see a sharp move lower. So watching bonds and watching those levels. I wanted to highlight one of the grains, which is corn. Corn was one of the charts we talked about that on the Friday after Thanksgiving, one of the few markets that was actually positive for the day in that route. And as you can see here, we have a steady stream of lows and highs, higher lows, higher high, higher low, higher high, another higher low was put in this week. The key level here to see if we're going to really run higher or if this is just more congestion is this 590 area. If we can clear 590, corn is set to challenge this downtrend line in the half square, which is up around 625. So this is a really important week and a really important level for corn. We want to see if we can get on top and stay on top. Corn looks bullish and looks ready to break out. If not, if we fail here, we're certainly going to come back and test this trend line, and most likely going to come back minimally and test this half square around 555.
Be stuck in that range.
Yep. Okay. And they might channel like they did here for this entire square. But it's in a position where it's got a shot at breaking out. Let's check the precious metals next. Here's gold. Barrie covered gold. The reason I have gold here is it looks to be, curling up and producing this series of higher lows with higher highs. We tried for 2 days to breach this trend line. They couldn't get a close below it. Once they closed on it, and then Friday we closed above it. If we can hold this line, I'd like to see us, come up and test this. And if we can break through this 1835 is the key level for me. Staying on top of that and getting above that, it creates a pathway to much higher prices. Until we do, unfortunately, I think the channel of this half square that we've been in since summer is what's going to define the price range right now. So on the downside, we have to stay above this 1744, 1745 area to keep from sort of rolling over. And on the upside, it's the 1835 area. That's the definition of the channel. It looks, again, looking at lower time frames, we're watching to see if we get some good price action there as a way to potentially play this upside move. Because as Barrie said, we've been in winding up for so long in gold that the move out of here is going to be fairly explosive.
And you can see the sentiment, right? Everybody's getting a little sour on gold, and
that's one of the best things. That's a very good point. Is a lot of for the last year we haven't had sentiment on the bull side in gold and silver because there's been so many bulls. Even the bulls are frustrated now and sort of giving up and saying, I should have bought Bitcoin. I should have put my money in tech stocks. I'd have done a lot better than sitting in gold. So, and that's the kind of stuff you see generally, the give up right before the big moves happen. So we are on alert with precious metals. And here's gold's cousin, silver. I think it's in a very similar situation to gold. The only difference between these two is the pullback in silver has been, since the highs, has been really much more of a sideways affair. I think it's in the same spot. We're defined by this channel that, has the upper bound around 23.25. The lower bound is at the lows that we saw in September around 21.50. We want to see it get above this full square, sit on top, and then silver looks like it could be ready to go. And as Barrie said, just like gold, the sentiment in silver is pretty negative at this point. So any positive price action could really, really move here. So very bullish on silver and thinking we see good things with silver fairly soon. The only other chart that I wanted to show, because everything else, and this is a sort of a general comment on the rest of the commodity complex, everything else is in some sort of consolidation or correction. Like they've had big moves and now they're digesting those moves. On the next video that we're going to record this weekend and we'll post about the monthlies, we'll talk about, you know, how those congestions look like from a bigger picture standpoint. But right now there's, you know, from a daily or 4-hour standpoint, there's not a lot to do on any of these other commodities. So gold and silver and coffee right now are the ones where there could be something potential to do here. And the reason I wanted to highlight coffee is because I want to show the kind of action you want to see at one of these full squares. You know, coffee broke out of the half square here, so we knew on this breakout that the full square was the target. We got to the full square, 3 or 4 days, almost a whole week of battles here at that square, and we ran up, pulled back, and the pullback again, the battle this past week, all 5 days, was testing this level. And as you can see, the level held, and we closed the week, you know, well above it up here. So coffee is even though it's had a heck of a run, is showing very bullish characteristics. Don't know whether it's going to happen this week, next month, but the next move here looks to be higher, provided that we can hold this full square, which is in around the 230, 231 range. And the other thing to notice when Barry and I were talking is, look at the move and look at where the lows are coming in relation to the previous highs. Mm-hmm. That's a lot of air. We haven't even come back and tested any of these highs from the summer or from, you know, early October. So this is a market that's poised to run higher. We know the level to watch. If we lose 231, something else is happening, a bigger correction or a bigger consolidation. It doesn't make the market long-term bearish. It just means that on a daily basis, the move to the upside looks to be done. So watch the level. Again, if you need to check where all the levels are in all the different markets, you know, check the spreadsheet. Please give us thumbs up and likes and ring the bell on YouTube so that we know you like the content. The volatility is back. I think in summary, what we saw this past week is volatility's back. It's going to be more important than ever to have good levels to trade against, so you can make certain you've got you know, a favorable risk reward ratio. Anything else you have to add, Barry, with the increased volatility before we cut off for today on this one?
Meaning coffee or overall?
In general, in the general market.
Well, I don't think we're done, and that's why we have to really watch those levels to see how we finish up the week, finish up next week. I think there's more to go. I don't think we're done by any means, especially if the lows go. I think there's a good chance that we go test a little lower next week. So we're watching very closely, and if any of these levels that were posted gets taken out, we'll update them on the spreadsheet. So keep that in mind. That said, we know what the cycles, you know, where the cycles are. You know, we had cycles at the high. You know, we know where we're pulling back into, and looks like a lot of these major markets are at critical levels, right? They're all at make or break sort of levels now, and so I think, yeah, we should be watching everything closely.
There's a lot of opportunity in the market.
Mm-hmm. Yep.
And, you know, the main thing is don't get caught up in the headlines or the news. Focus on your levels and trade accordingly, and things should go well. So we'll talk with you next week. As I said, we're going to record a separate video for the monthlies. That'll be posted as well this week. But have a great week, everyone. Have a great week, Barry, and we'll talk soon.
Thanks, Ben. Have a great week.